Okay, for this video, I wanted to cover what are the differences between a 501c3 organization versus just a regular corporation. Right, so I think there's a lot of confusion about what it means to be an actual 501c3 entity and the different types of corporate entities that can be formed under state law. So you can generally form two types of corporations under state law. You have either a stock corporation or a non-stock corporation. The stock corporation is the one that we're all most familiar with, right? This is a for-profit entity, so it's just, let's say, a regular Delaware corporation that's going to be taxed as a C corporation for federal tax purposes. Now, because it's a stock corporation, that means it is eligible to issue stock to shareholders to raise capital, right? So that's how this stock corporation raises capital to basically raise funds to conduct business, right? It sells stock to shareholders in exchange for cash or other property. Now, the shareholders in a stock corporation are the owners. So they can vote for board of directors, and the board of directors then in turn appoints chief executive officer, CFO, COO, all those types of C-suite individuals. And those individuals then hire other employees to conduct the business, right? Now, with a non-stock corporation, the entity isn't permitted to issue shares, okay? So non-stock corporations don't have shareholders because the intent of the company is to operate as a non-profit entity. So there's not going to be any earnings or profits within the company that are going to benefit some type of owner. The corporation that's a non-stock corporation can raise money through donations, right? And generally these donations are non-taxable income to the entity. Now, because the corporation does not have any shareholders, the board of directors governs the affairs of the organization, right? So the board of directors has exclusive authority to hire individuals, run the entity, and that's it. Because again, there's no shareholders to answer to. So the board members are appointed when the non-stock corporation is initially created. And then in the company bylaws, so the corporate bylaws for the non-stock entity will outline how long board members serve, what you need to do to replace board members, how do we vote on who to add and who to kick out perhaps. And so that's how the non-stock corporate entities are governed. Now, non-stock corporations, upon their formation, they're not automatically tax exempt. This is a point of confusion I see very often. If you have a non-stock corporation, believe it or not, it's still taxable as a C Corp until it applies for and obtains tax-exempt status through the IRS. And so the tax exemption with the IRS can be completed by filing either the 1023 or 1023-EZ. Those are for nonprofit entities that are charitable. And then you have a 1024 form, which is filed for other types of tax-exempt organizations, right? So charitable organizations, these are your 501c3s, right? They file the 1023 to get their tax exemption, but then you have other nonprofit entities out there like business leagues, social clubs, fraternal societies, sororities, cemeteries, mutual insurance companies, the list goes on. These types of entities, if they're set up as a non-stock corporate entity, they would have to file a 1024 to obtain that tax-exempt status. Okay. So now with 501c3 organizations, these are the charitable organizations where if you donate money to the charity, it's generally a tax-deductible expense for you as a taxpayer. So on your Schedule A itemized deductions, you can list tax-exempt the donations to those charities. So if you give $1,000 to, let's say, the Red Cross, you can deduct that on your tax return if you itemize the deductions. Now, what's important here to know, if we go back to the 1024 issue, for 501c3 organizations, they can deduct, if you donate money to a charity, a 501c3 organization, you can take a tax deduction. If you donate money to some of these other types, like a business league or social club, that's not charitable. So you actually don't get an itemized tax deduction for donations to business leagues, social clubs, and so on. Very important distinction. I think a lot of individuals believe that if I give money to any kind of tax-exempt organization, it's an itemized deduction as charitable, and that's not true, right? It's got to be truly charitable under 501c3. If it's one of these other 501c designations, then it's not going to be deductible. Okay. Now, a regular stock corporation, like I said before, is taxable as a C corp by default. There are certain exceptions where you could make, let's say, an S corp election, but when you have a C corporation by default, contribution to cash to the corp in exchange for stock are generally a non-taxable event, so neither the corporation or the shareholder has to recognize any kind of income or gain. There are little nuanced rules for contributions of property, but let's just say, for argument's sake, we're just talking about cash. Issuing stock in exchange for cash, generally not an issue. Any net taxable income that's earned in that for-profit corporation is going to be subject to corporate federal income taxes on a net basis. Okay. Now, just to wrap everything up here, in summary, the initial question posed, what's the difference? Well, the 501c3 designation is a section of the tax code that applies to charitable organizations for a corporation, right? So a 501c3 entity is still a corporate entity, right? It's a corporation. It's just a non-stock corporation. And then in particular, it's a non-stock corporation that has filed an election to be treated as a tax-exempt entity under 501c3 of the Internal Revenue Code. Okay, so that is the big difference there, if any. They're both corporations, but the 501c3 entity is a non-stock corp, and it's tax-exempt under 501c3 as a charitable organization. Okay, so that covers it for this video. Hope that was helpful, clarifying some of the questions. If you have any other questions, please leave me a comment below. Happy to answer any I can. I try to get to as many questions as I can. And I look forward to seeing you again on the next video. Thank you.